Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with my co-host James Mason, where our goal every day is to bring you some insights and ideas into your daily trading activity. Good morning, James. How are you doing?
Todd, good morning. I'm doing well. How are you?
I'm I think I caught something, or I'm going through puberty again. I'm not sure which.
I know everyone. It's weird that Todd and I are both sick at the same time, but we have not been kissing each other.
That's true. That's a true fact.
All right. So Dow futures are currently down 82 points. S&P 500 is down 6.5 points. And probably going to have a strong bearish day. Now, yesterday I was expecting it to go from green to red, and it did quite the opposite. We actually broke out and had a pretty dang-on bullish day, which kind of surprised me, to be honest. But here we are. It is what it is today, and let's move forward, see what the market will give us. So we're going to keep this one kind of short since Todd got me sick from the podcast. He spread his germs through the microphone, and it got on my lips. Now I'm sick.
So the rest of you, stay back from your monitors. I don't want to get anyone else sick.
I know. Todd is just, he's just that contagious. All right, let me share my screen real quick. All right, so let's just talk about ticker LYFT. This is Lyft, and we're just going to talk about a technical breakout right here. So Lyft had strong earnings, had a pretty nice gap up since yesterday after their earnings. Yesterday we closed out at 45.32, and currently pre-market we're sitting at 51.51. Now, what I'm looking for before deciding to make an entry here on Lyft in the future is it breaking above the 54.30 range. And I'll be looking, scroll back out. I'll actually be looking to have a target price right around this upper $64 range. Now, we can see when we open up Lyft's daily chart, after its IPO, its sell-off, and then it's trying to make its way back up. Now, with my target price being right there around that $65 range, I could actually be missing the biggest run that this thing will probably have. And that is usually when these stocks break above their IPO ranges, that's when they have their greatest runs. Now, what I'm going to do to handle this or kind of work out this trade is I will enter this with call contracts when the time is right, breaking above that $54-$30 range. I'll write it up just depending on how it rides. If it rides up smoothly to 65, I'll take profits. I do expect some resistance around this upper range. And if we get that resistance and it pulls back again, what I'll do at that point, I'll let it pull back. And then when it bounces and comes back up to break above 65, I'll actually enter again to catch that second wave of that little bullish run, hopefully breaking above these IPO release ranges. So that is what I'm looking at overall with Lyft. Now, keep in mind, everyone, if we would have some kind of macro event in the overall market, that could easily take this thing down. So you have to decide where your stop losses should be placed and just trade it accordingly. So we do have one ticker request. I keep seeing pop up. It's ticker OCGN. Let's take a look at that.
Ocugen.
I'm just looking at the news real quick. OCGN, they have almost 199 million shares outstanding.
Wow.
The short interest is pretty significant. 52.75 million shares being short. Short percent of the float, 27.16. Days to cover, 3.3. So pretty significant. We probably are actually already experiencing that squeeze. And closed out yesterday at 1567, currently at 1730.
Pre-market high was 1880.
So what I would watch out for right here with that pre-market high and drawing that trend line across the chart, when we step back to the daily chart, we can see how it actually got rejected there in the past. And currently we're getting rejected there again. So OCGN could experience a bearish day today. I'd watch out for that. Now, if we would, let's say on this 5-minute chart, we kind of consolidate here, and then at the bell, break above 1880, then we could run a little bit more. But if you're going to trade this, guys, if this breaks above 1880, and if you're going to trade this, be sure to have enough day trades. It aggravates the crap out of me when a lot of y'all jump into these damn trades. And a lot of them, they're just day trades. They're simply day trades breaking highs from the past. And you guys have no day trades left in your account. If you don't have a day trade to let this trade work out to cover you to where you won't break the PDT rule, then this trade is not for you. You don't need to trade this or any of these trades. You always need to have at least one day trade available to bail yourself out of a trade. Because what happens is you guys jump in thinking, oh, I'm going to make some money. And then when it does whatever it's going to do, even if you are making money, but it doesn't put you over 25,000, everybody starts saying, oh, I'm stuck in this. I can't get out. And I'm always like, how are you stuck in this? You're long, ain't you? And everybody's like, yeah. I'm like, how you stuck? And then everybody's just like, oh, because I don't have no day trades left. Why would you enter the trade if you don't have a trade to get a day trade to get out of it? So then they have to hold it until the next day, and then they lose a crap ton of their portfolio. So,
and really, they need to have 2-day trades in case they need to cut their loss and they want to re-enter. If you only have 1-day trade, you have to get it almost perfect. And I can tell you, I traded this morning a little bit in the pre-market, and if you don't have that second day trade to where you can execute a stop loss and reposition yourself or re-enter a different price, it makes it more challenging.
Yeah. So guys, like, you're only doing yourself a disservice by not having any day trades available if you're under the PDT rule. As much as you like to think that you're making money, you're not. Because more times than not, you guys end up taking these trades, you don't have a day trade available, and then you have to hold on to it, and then it wrecks everything in your portfolio. So,
James, 1880 was the pre-market high, and you said it has to break that. Do you have a rule or a thought? It just can't break it at 1885, and it's green light go. Are you looking for, like, it's got to break it cleanly, or does it have to hold up there? Does it have to close out a 5-minute candle? What's your thoughts on when it breaks?
well, it's really, for me, it depends on the consolidation factor before the breakout. Now, if we have, like, let's just say like one candle that rips right above it and it just keeps on ripping, then that concerns me. But if we kind of consolidate like how we are at this moment and slowly creep up and then we rip up above it, then I'm okay with that. But for instance, let's say if we were down here a little bit more in this range and then we just had one candle that rocketed all the way up above it, chances are that's going to pull back pretty hard. So this easier it just creeps up right here, and the closer we get to 1880 and then it pushes up above it, then for me, that's a green light as soon as we break above it in that scenario. So, I mean, really, guys, this just comes down to, this is how I decipher stuff based off of my experience in my trading career. I know a lot of you guys are, at work, and it makes things difficult. So you guys put in like OCO orders, things such as that. And when it does spike up and break above 1880, you get filled and then it drops. Well, if you look at a lot of those candles, when it spikes, it will do exactly what I was just saying that I hate to see. It'll be somewhere like down here, and then just one massive candle. It will cover that entire chart right there, breaking above it. And I guess that's just the downside of putting OCO orders in while working and not really being able to watch it. So
if you're at work and you're working the OCO orders, think position size. Think so you don't hurt yourself. We talk to members all the time. They're like, they go all in 6 trades in a row. They think everything's great, and the 7th trade doesn't work out, and then their net value is less than when they started the previous 6 trades.
Yep. So that's all I have today. Again, we're gonna make this one short. Ty get everybody sick by licking everybody's microphone. So,
I'm sorry. Watching Car yesterday, I got so excited. It was an exciting day yesterday, so I could hardly hold myself back.
Well, all right, everybody. So remember, guys, trade safe, trade smart. Have that stop loss in. So other than that, we will catch y'all in the next one.
All right, see ya.